Next, I'd like to introduce Mr. Derek Rundell from Tomorrow Ventures in Palo Alto, California, and also Denver, Colorado. You'll notice that we had originally had Court Corsi as a speaker, and Derek is coming to speak for Court, so I will let him do his bio, his introduction for you. But we're really excited to have him here today. He's got some real exciting information to share with you. How many people here want to talk about money? Okay, good. So be sure to pay attention, okay? All right, thank you so much, and we'd like to welcome Mr. Derek Rundell.
Yeah, perfect. Thank you.
What would you tell us about you?
Sure. Good morning. I'd like to thank Mina and her team for including me and inviting me here. I love Atlanta. I've spent a lot of time here over the last 20 years. Today I'm going to be talking about venture capital and specifically investing in early stage innovative venture deals. But I'll start with my background, the background on my venture capital firm, Tomorrow Ventures, and then our co-investment strategy. Next, please. So first, my background, my name's Derek Rundell. I'm an entrepreneur, operator, and investor. I started my first business as a kid, shoveling snow and mowing lawns in the Midwest. I built that business up pretty big, actually, that I almost didn't go to college. Fortunately, I did. I went to business school at the University of Colorado. After graduation, I started, built, and sold numerous companies in the tech, media, and entertainment industries. I've also built companies in other areas. For example, I had a chain of 20 car dealerships at one point. In addition, I went to law school on a telecommunications scholarship, which was really valuable because I learned incredible business laws and technology rules and regulations. Overall, I've been lucky and had success, but I've also had some valuable failures thrown in my way. And bottom line is I always try to learn from every experience I have. My core philosophy is simple. I look for a great opportunity backed by great people where I can add value in numerous ways. Let's get to venture capital. My business partner and I, Court Corsi, started the firm about 4 years ago. Court and I have actually been in business for about 16 years together, so as far as partnership goes, it's been long and successful, so we've been pretty fortunate there. About 4 or 5 years ago, Court and I became friends with Eric Schmidt, who was then the CEO and chairman of Google. Fortunately, Court, Eric, and I realized we had a shared vision. Originally, we thought he'd be an investor in one of our new deals, but as it turned out, he actually wanted us to set up a VC firm for him. So over the last 4.5 years, we've made 62 investments in 6 countries and 19 cities. We have over 250 co-investors, almost half of which are significant family offices. Our core themes are specialty finance, media and gaming, technology, and recently eco. Separately from venture, we also lead a distressed asset strategy for several high net worth families. Our smallest investment is around $10,000 and our largest has been $10 million. We have built a great network that generates about 150 to 200 deals per week. We're different from most VCs in that we invest globally, where most VCs don't like to invest outside their backyard. It's ironic, my experiences have come full circle from being the entrepreneur looking for money to now being on the other side of the table providing it. So I feel that we have a great, unique, and interesting foresight on what's going on in venture capital today. Next slide, please. VC or venture capital is different than private equity. I'm talking primarily about early stage venture capital. The differences blur as you move to later stage venture capital and growth equity. As an asset class, venture investments have a more volatile risk return profile. For instance, 1 to 3 out of 25 investments is where you make all your money. The rest you'll hopefully cover or break even. It's difficult to pick the winners. Therefore, you need to do a portfolio approach to investments, not just one-off investments, at least in our opinion. We fund about 1 out of 200 to 300 good deals we see, which is similar to a lot of the top VC firms. Therefore, to support that, we need a really good network to source and filter opportunities. Most fundamental differences are driven by the nature of the target investments, established companies with strong cash flow versus startups. So Our check size is traditionally smaller because it's difficult to put a lot of capital to work in the right way. So for instance, we typically may invest 250 to 1.5 million as an initial investment with room to follow on. The flip side is the upside can be significantly higher. Venture capital investors typically help we typically help our portfolio companies most by helping them build outside relationships. Our investments often look to us for introductions, potential investors, clients, employees, partners, and exit opportunities. Next slide, please. There's more competition these days in the venture capital firms. Clients and angel investors can all write million-dollar checks. That doesn't happen as much in private equity. As a result, the returns are skewed to the top VC firms. What does it mean for us to co-invest in a venture? We don't experiment in co-investing. We take hold of it and really build a portfolio. We invest in deals we have experience and relationships in the industry, and if we don't, we make sure our partners and co-investors do. Next slide, please. One more. I guess I'm a little behind. Sorry. Okay, thanks. We align ourselves with the right firms and individuals that have the right experience, and that's allowed us to build this network to give us this 150 to 200 deal flow or deals per week. Next one, please. So putting together a co-investment. It's a shorter deal flow timeline. We have the ability to move quickly, less diligence on business, because oftentimes in the venture stage there is no business yet. It's almost a concept. We spend more time on diligence on the team and the industry and the competitors, and also who else we know in that space that can really help. We also have a little bit less focus on the deal structure. A lot of times deals can get complicated. The private equity guys want to own the whole company, where we want to help in the growth, take a little piece of it and make it valuable. We try to understand the business, and again, our big thing is having the right partners and having the ability to do a follow-on investment. Next, please. We really like early stage co-investing. We look at three main things when considering co-investing, and a big thing for us too, obviously, is we're very selective about our co-investors as much as we are about the investment. But the three main things for co-investors are, do they know and understand the motivations and expectations of the company? Number two, can the co-investor provide value other than just capital? That's really important for us. What else can they bring? The contacts, the relationships, the market know-how. Third, do the co-investors have a basic familiarity with the flow of early stage companies and an appetite for follow-on? Again, it's not just the money in the initial round, but it's the follow-on. If you can, next please. So here are some examples of our investments. We have investments, for example, in seed investments like Malibu IQ, later stage like Prosper, and if you could go to the next slide, please. Here's an example, actually here in the backyard. ShareCare is actually based here in Atlanta. It was brought to us by the founder of WebMD, who also started ShareCare. Basically, ShareCare is the next generation of WebMD. Investors outside of us in ShareCare were Oprah Winfrey, Dr. Oz, Mark Mastroff, and Corey Crawford. Next, please. Here's another sample investment, which is BrightTag, a company based in Chicago. They're an online tracking tag company founded by the former CMO of Orbitz. That was actually brought to us by the Pritzker family. And that's an example of us. We've done a lot of deals with them. Once somebody brings us a deal, we really like kind of co-investing in them, getting to know them, and doing a lot of deals. Next, please. Here's another example, headquartered in Chicago. This is Forbes Travel Guide, formerly the Mobile Travel Guide. I'm not sure if you're familiar with it, but when you walk into a hotel, it has the 4 or 5 star kind of plaque on the side, but that's essentially what they do. This deal we actually did with a number of high net worth individuals and our firm. Next, please. Here's Tomorrow Ventures in a nutshell. Just to recap, in the last 4+ years, Tomorrow Ventures has grown into a mature organization. We've developed a national brand focusing on technology, specifically consumer internet, cloud, media, entertainment, and we're very interested in getting into the eco space right now. We have built a large, diverse portfolio to accommodate VC's risk-return profile of 60+ companies. We're geographically diverse and in addition to sector diverse. We have partnered with the best-in-class venture firms and high net worth individuals to give our investments the best chances of success. We have about 250 co-investors, a large percentage of which are family offices. We have more than $250 million of outside capital invested in our portfolio. Our broad geographical reach represents our wide network, and this didn't come easy. We're really busy traveling, researching, talking, visiting, hands-on, seeing what's out there. As you can tell, I'm about to fall asleep. I've been on a plane all week. I believe taking a proactive approach to finding the most innovative deals is what's making the next generation of successful venture capital firms. Whether through founders or team members, we believe it's all about the people and it's all about the co-investors. So thank you very much. Appreciate you guys having me. And if you guys have any questions, please let me know after this. Thank you.